And welcome everybody. This is Chart Request Live. We do this show every Tuesday and Thursday at 1 o'clock Eastern time right here on Stock Market TV. I am joined as always by my esteemed co-host and friend Patrick Dunlawilla of the Chart Report. What's up, Patrick?
Stevie, happy Tuesday.
Is it a happy Tuesday? I hear the market's correcting. We're like 4% off of highs. Is it happy for you?
Listen, there's some bad breaks out there. A lot of stuff's at like a very, very key make or break point. Some stuff could still save it here, but so far, man.
So key levels, I think you're talking about stuff like this. This is the Nasdaq equal weight.
I think there's still a chance it could repair here, but definitely not a good look.
Not a good look at all. And we can go around the horn on this.
Yep.
RSP.
Yeah. Just when breadth was starting to improve, right? It was just starting to look healthy, probably its healthiest in years, right?
Yeah.
And then the last 2 weeks, pretty much all of April, it's just been, you're back to that just broad weakness.
It was improving in a lot of areas, but like something like small caps, really not much all year, kind of steady deterioration since like January, February. The broader indexes, it's almost like the universes. So NASDAQ 100, S&P 500 with strong internals caught down to the universes with weaker internals, like the small cap 2000, the New York Stock Exchange. NASDAQ Composite never has strong internals, but that's just how it's built. But that's kind of like what we're seeing over the past, 3 weeks. I've been coming on to my various shows and saying, I'm kind of struggling out here looking for new longs. And some of the best information that I get as a market participant is from my own trading. When I'm going crazy, putting on short dated calls and everything's working, I know times are good. When I'm out here looking like I don't want to enter this, I don't want to enter that, getting stopped out of this, kind of tells you corrective mode, right? So I think this has been brewing beneath the surface, this corrective action, really since last month, middle of last month. Now it's coming to fruition more at the index level, finally. Yeah. Yep. But there's still going to be opportunities.
Absolutely.
You just have to look harder in certain tapes, right?
Yeah, before we dive in, though, I want to get your take on the whole reflationary trade. It seemed like when you saw that shift in the market, let's call it 2 weeks ago, pretty much the only place to hide out was energy, a lot of these material names, and some of the mining stocks, things like that, commodity-related names. What do you think of that now? Do you think it's getting too crowded? And do you think it needs to pause for a second, or do you think it's alive and well?
I think it's alive and well and needs to pause. How's that for answering your question by not answering it?
You should be a politician, Steve.
I just pulled up a chart of inflation expectations. So what we're doing here is we're comparing Treasury inflation protected securities versus just standard Treasuries. And massive base, right? If you're in terms of the primary trend, coming off of the pandemic lows, like a lot of this thing was just a screamer, straight higher. And then it's been sideways since second quarter of 2022. A lot like a lot of commodity stocks, energy, materials, right? Long consolidation here, but now we're hitting our highest level since June of 2022. June of 2022 is when gasoline peaked. Most commodities really peaked. I think we're going to go back and test those old highs. So here's gasoline. Let me clean this thing up. All my markups on here. Look at that.
Now, is that tips chart you had up? Is that your go-to inflation gauge, kind of?
I mean, look, as long as it continues to look like break evens. So here's the 10-year break even chart. Looks rather similar. Maybe not as good. Not quite at those, June 2022 levels, but I think heading in the right direction. So I would start to draw these. This is break even interest rates.
I got to ask you, you think that's a failed top?
Where? I don't see it.
You had a top drawn in there.
Oh, no. That's why I'm redoing the drawing. I think now you want to draw this like this, right? So coming off, you could draw copper like this. You could draw gasoline like this. I think we're forming some sort of base here. This is inflation expectations. This should move with inflationary assets. This is why interest rate cut expectations have fallen this year from 7 all the way down to, I think we're at about 2 now today. Risk assets been resilient through it all, but I think it continues to tick higher. But when we look at something like materials or even energy, just a great run for a couple months now, and this is a massive failed breakout.
Yeah, pretty nasty, huh?
So we can't ignore that. This is not to say, oh, it's over, right? Sell all your material stocks, this trade is done. I think it's just getting started, and we'll look back at this failed breaky and say, oh, that was just a false start. This can take days, it can take weeks, it can also take months.
Yeah.
We could be talking about this still in the box this summer, early fall, right before we finally get a resolution. So I think patience really pays, and it's time to look back to those old leaders, mega cap tech. So I think we have some in the mailbag, and we'll get to some. But I know that you brought Netflix up on the morning show this morning. These are the kind of charts I'm talking about, right? Look back to these old leaders. I think there's something there. This is Netflix heading back towards those old all-time highs. Here's Google slightly above those old all-time highs. Talk about a great entry.
How about that? Google and Amazon just breaking out, and you're not hearing too many people chattering about that.
So maybe, if we're entering some sort of defensive tape, if we want to prepare ourselves for some sort of corrective wave here, I don't hate parking it in some of these blue chip techs.
Yeah, absolutely. But let's dive in. You ready?
Please.
All right, let's kick it off with ConocoPhillips, COP. We get this one a lot, don't we?
Good. It's because our chat is smart. All right. Pat likes triangles.
Love the ascending triangle.
This is the Pat triangle.
Yep. I like that.
More important point here is you had a major bottom back at the COVID lows, right? Ripped off of there. ConocoPhillips went from 20 something bucks to 130 something bucks, right? So do the math there, more than 6x. Not bad for one of the largest integrated oil and gas companies in the world, right? So
and also I think at the time you gotta bring us back to where we were at the time. These stocks were a joke. Energy had been underperforming for years. I mean, at least now they have some tailwind behind them. They have some gusto, but before those were they were a joke, right? They were. Yeah.
This was the crude oils trading negative days. We're never going to use fossil fuels again. It's all over, right? And then just a year and a half later, up here, right at the highs, this was Kramer on Mad Money saying that everyone needs oil and gas exposure and every single portfolio should own fossil fuels, right? And
that was the only game in town too, right? Like if you think about where the sectors were, it was energy and nothing else. We were in a bear market. Everything else was in a bear market. Energy was up like 50% on the year or something like that.
That's right. And then we went sideways for, 2 years now, right? This first peak here, this is second quarter of 2022, right? So we're 2 years of sideways, more or less. Some of the sideways patterns are cleaner than others in this sector, but the overarching theme is the same for everything, which is simply that we went up big and then we digested gains in a super constructive fashion.
Very
constructive. All this sideways, right? And then, okay, as a technician, we ask ourselves, where are we likely going from here? Well, this is the primary uptrend. This is the consolidation or the digestion of the gains off the COVID lows. And we always want to earn the direction of the underlying trend, which is that we eventually get an upside resolution. We're already seeing it, not just from so many components beneath the surface, but here's XLE, the large cap energy index itself, already breaking out of a pattern that looks strikingly similar to ConocoPhillips. Again, one of those scenarios where we can build a list and say if Conoco's going to go, if Exxon's going to go, Pioneer's going to go, I'm just throwing out oil and gas names, then the others are probably going to follow suit, right? Their peers are probably also going to go and resolve higher. So I think, ConocoPhillips, we can get long, but we want to be patient right now because it's been a big run for energy.
Yeah,
And
so a lot of these energy names had that big bearish engulfing on Friday, that big bearish engulfing candle. I know in XLE, it engulfed the prior 6 days. So I'm curious to see what that looks like on here on a daily when you're done marking up
really,
weekly.
but not too much follow through yet. I mean, look, yeah, it's enough follow through. I mean, where this is happening is important, right? Here are the old highs from November of 2022. This is the bearish engulfing that Pat's talking about right here. Okay. And now this will be the second day of follow through. The way I would look at this now is we can pull back. I'm just fibbing out the run off of the January lows here. We can pull back to 124.
Yeah, and
That would
that
only
coincides with the former highs
38%
there. Yeah.
you know, it wouldn't break anything.
No, yeah.
And I think this eventually resumes higher, but it's not until 135 where I really want to get involved. And then let me just give you a price target once we do get the breakout. But again, for these patterns right now, for this group right now, patience pays. So if we just found this whole range, call it 135, target of 171. What I don't want to do is I don't want to trade this range.
Well, yeah. You're saying as long as we're in this penalty box, nothing
Yeah.
to do. Yeah.
Yeah, and I think just from the past several days, the last 3 days of price action, the bearish engulfing, and now 2 days of follow through. If we close the way this candle looks today, it's 2 days of follow through. It's telling us we're probably going lower, right? So I think 125 gives you the 38%. But we could fall back. Who knows how far we could fall back in this range? Again, I don't know if this corrective action ends tomorrow, next week, next quarter, whatever. It could take some time. When it finally does end, you want to be very involved in these stocks. I don't want to be entering new positions in energy right now, though.
Yeah. Patience is kind of the key takeaway is what I got.
And
Also, maybe set your alerts too, right? Maybe set your alerts so when they do reclaim those levels, you'll know.
That's right. And what I also don't want to see, right, for my bullish energy thesis, I don't want to see XLE correct in a way where this is a failed breakout, right? So I think XLE right here today, down about 1%, really wants to hold here.
It really needs to
90.
dig in, right? Yeah.
I do want to see this hold. Otherwise, what are we going to, we're going to be marking up this chart like this very soon.
I know. I was going to say, as much as I love ascending triangles, you got to be equally as bearish when they fail, right?
You don't want this.
Yeah.
Right. So let's see buyers show back up at this form of resistance and hope that it turns into support if we're bullish. Then I think this corrective wave probably is gone in a shorter rather than a longer time frame here. But if we're back in the box and all of these breakouts start to come undone, this could take a couple months, right? Like I said, we could be talking about these same patterns this summer, this fall.
Yeah. But I will say maybe it would be a good sentiment reset, right? Because it did seem like all of a sudden you had that kind of 2022 fever where it was energy and nothing else for maybe the past 2 weeks or early on in April.
Yeah.
But let's move on. The next two names we got in the mailbag, and then we'll get right to the chat. But the next two names are gold mining names. So the first one's AGI. And I think gold and metals actually held up a little better than some of the energy commodities on Friday. Commodities kind of broadly reversed on Friday, but gold and silver both ended the week nicely positive on the week and still ended at multi-year highs. So that's way more important. That I feel like multi-year highs trumps any sort of bearish engulfing candlestick or any short-term candle pattern you might have. Would you agree?
I would agree. I think the uptrend in Alamo's gold is as good or better than anything in its peer group.
Right, and this one's been a leader too. Even before gold was breaking out, this one was holding up really strong.
It's just a beautiful stair step higher.
Base on base.
Right. It's
Can't stop, won't stop.
Base on base, and it just keeps going. So I think 15 here, we got the 161.8% fib. We're fibbing out basically the 2016 to 18 decline here. So that would be the primary target. It's also the pivot high from November or December. So 15 above there all day. We're trading right around there today. So this one I think is pretty actionable right here. That's really, yeah, that's it. Listen,
No,
Alamos is as good as anything in the gold mining space. You're looking at the right vehicle here, I think.
no, you nailed it. No point in dwelling on it. Let's move on to Newmont, and then we're getting to the chat. So be sure to drop
Yeah.
them all.
Listen, I wish I could
Go
say
on.
the same thing about Newmont because I think that would be a bullish development for the entire gold mining industry group because
And
Newmont is the industry leader or the bellwether there. But this has been just such a crap chart for so long. Where do we even define our risk? So okay, let's start with the positives. Dug in where we needed it to. Okay, called $30. You got a shelf of lows here, 2016 through 19.
very well defined. Yeah.
Low there in March that we rebounded off of. Now let's zoom in, get a little bit more tactical here. I would draw a trend line like this.
Oh yeah.
And we're getting rejected again. And this is really a pretty clean downtrend channel, right?
Yeah. First, I was gonna say it's a little too early to call that rejection, but I think we can call that rejection.
Yeah, I mean, look,
Yeah.
3 days tested once, failed, tested again, bearish engulfing.
Yeah,
I mean,
that's
look,
pretty. That's pretty clear.
that's a fail for sure. You
Yeah.
had the overshoot to the downside, right? And then the thrust higher, and then almost got it done, failing back into this range. As long as this
Like we overshot on both sides.
and you see that at turning points. So I think this is getting reversally, right? But again, work to do. You get confirmation like this at the pivot high from December. So 42 and a half, 42 and 3/4 in the Newmont. We're above there. It has my blessing, and we'll probably be drawing this one more like this in the
I was
future.
gonna say if it goes down and makes a right shoulder down there at 33-ish, that would be constructive. I know I'm kind of wishful thinking here, but
That would be more than welcomed by bulls, I think.
right when we're in this kind of corrective phase on it, that's what you're probably looking for is kind of a low down there.
Dropping a WAP here again.
Drop in a WAP. You
Yeah.
definitely you don't want to see it make a new year-to-date low. You definitely want to see it hold above that.
Oh, if 30 breaks? No, if 30 breaks, you got it. This is a short.
Oh yeah, yeah. Well, I mean,
Right.
we started off by saying this was a very well-defined level. You have what, like 5 valid touches at least.
Yeah, I mean,
On the
look.
weekly chart, yeah.
Do you want to look to short Newmont? Is that even the way you should be thinking in an environment where gold's breaking out to new all-time highs decisively? I might add, right? No, not at all. But maybe Newmont finds itself back down here at the lower bounds. Gold is I don't think it could even be a failed breakout at this point. The follow through has been so strong, but gold somehow falls back into the box or looks a lot different. A couple months from now, it's short Newmont below 30. But I'd rather be looking to enter a new long above like 42 and a half here.
Well, hey, before we leave gold, Rich in the chat here, let's just go right to the chat since we're already done with the mailbag. Rich is asking about Ego and SCX, 2 other gold miners. So
FCX?
yeah, FCX. That's
It's copper.
more of a
It's base metals.
diversified metals.
Maybe 10% of their revenue stream, I think, is
Look at that.
gold.
Whew.
So Ego looks good. This is one that we like. Ian's been all over this one. Very, very good. Let me see just if I fib this out. No, it's not going to give us anything. So look, here's the level. Hold on to your Ego above 14. This one's getting it done.
It almost looks more like silver than gold, doesn't it?
Yeah.
Silver has that same little inverted head and shoulders right now.
A lot of them are both, Pat. I don't know anything about this company. It could be both, but I think on this weakness, this is a good one to look to, right? So the weakness of the past few days that we've been talking about, giving you a little bit of a throwback here. This one, as long as we're above 14, all day. This is in the same category or same basket as something like Alamos, preferred vehicle. And let's just give a price target here. So target 1 would be on a break or on a valid resolution above 14, which this certainly looks to be, right? Again, let the corrective action kind of play out. Wait for one green candle maybe to enter something like this. And then a price target at 20, that's not bad at all. Almost 50%.
Not bad at all. And the breakout's totally still intact. Like you said, it's just kind of retesting. Hasn't even officially retested yet. But
Right. Yep. Yeah, the
um,
closer to 14, the better.
so I want to bring it to the top of the chat here. A name that you mentioned before we started the video here, Crowd.
Is that
Yeah, yeah.
the,
Kevin in the chat said Crowd not a top against the 2021 high? Question mark.
I don't think so, Kevin. I think this is a classic non-top. So I was just talking to Patrick offline right before we came on about this exact kind of chart setup
And
where
there's a lot of them in tech right now that look similar, right? AMD coming in to retest.
100%.
Yeah, we could keep going down.
I think my exact words were, I will sell puts in AMD as soon as we get off this video.
Yep.
What I just said to Pat. So 290 for 300 for confirmation, but 290 CrowdStrike. We see this all the time in bull markets. I'm going to leave that arc green. It's a new thing that we're doing. Okay. This is the big primary trend reversal. Path of least resistance is higher. This back
Right.
here from 2021 was the old all-time high. We took it out in a pretty big way, tripling off of the lows from early 2023. And now we're simply just retesting it. So pretty damn clean. I'm going to flip it to a line. Look at that, right? Does it hold again? I think so. This is one of the cycle leaders out of the tech space.
Looks an awful lot like Bitcoin right now.
I want to own this all day. I have a position, looking to add to my position, might even add before the bell today. But it's bigger than just CrowdStrike. It's AMD. It's basically anything that looks like this. Google.
I mean, Steve, what about Bitcoin, right? I mean, does Bitcoin not look exactly like these?
It doesn't, in the sense that it's already back below those highs. Yeah.
I guess, yeah. Well, so it's holding that one low from what, a couple weeks ago, March.
So Bitcoin really.
That's kind of my line in the sand here. If that March low gets taken out, that's when I'm ready to call it failed.
Yeah, and that's a good point, right, Pat? Because it's right at the breakout level. Yeah, is it the same exact thing? No. Is it, for all intents and purposes, the same thing? Yeah, more or less. You do want to see Bitcoin, I think, above 67 ASAP. But AMD and CrowdStrike still holding, been holding. I even think you might get a nice little shake move in AMD today. Or I guess it was, yesterday.
Yeah, and AMD, I mean, that was such a nice little trade. It ended real quick. It was real quick, but it hit its target. It hit that Fibonacci level, and here we are right back at the crime scene again. So
yeah, and I think, Pat, you're talking about the last coil we had here at the upper bounds, and I traded calls here. Like you said, that was great. And I'm just going back to the well, right? I'll keep buying it against this level. I like this name long term. I'm happy to own it.
And you were saying you're risking $1 here, or you're risking very little. If the trade fails, this trade, the risk and reward is worth it every single day.
I'll probably sell puts and buy common.
But
CrowdStrike, I love. Let's give a target. Sorry.
No, you're good.
So if we were just fib this bad boy out real quick, what's that give us? 425. Oh, more than 40%.
Well, listen, the people want to see Coupang next. I think you had teased it out in our spaces earlier. So let's check that one out.
I love it when the chat just can't stop talking my book. It might be because we're looking at the same things because you guys are listening to me, but that just makes me feel so good because we will continue to find pockets of strength and charts that we want to be buying. They might be harder to find, and there might be fewer and fewer of them, right? As market internals are really kind of rolling over here, but you're still going to find bullish chart patterns. Coupang is one that really, really stands out. This is what we call a textbook breakaway gap.
Some of our favorites, right? And
Yeah.
Steve, by the way, Adam in the chat here said, Steve, could you give us a fib school one of these days? So as we're doing these fibs, next time you draw a fib, maybe break down, explain a little bit how you draw those.
So I don't do the bunny rabbit math. I was just at the Money Show with JC. We did a dual presentation in Miami on Thursday of last week. He can do the bunny math. For Fibonacci, I don't care so much about the math behind it or any of this ancient geometry. I know that it works. I don't bother my mind with how or why it works, right? But I've seen Fibonacci levels and I've seen prices react to Fibonacci levels time and time and time again throughout my career. And that's as far as I think about it, right? Yeah. When you get to an area where there simply is no price memory, a 161.8 or 261.8, right? Really
a breakout to all-time highs, right? Like that's the perfect time to use.
That becomes logical overhead supply zone, right? Without any price memory. So that's why we use them. I don't use Fibonacci like religion. And frankly, I guess what I'm trying to say is I would not be the best person to explain it. I can explain how I use it.
I was going to say, maybe explain how you draw it, because I get a lot of questions on, do you use the highs? Do you use the closing prices?
Both.
That sort of thing.
You can use both. You can draw a range. It's not a perfect science. So let's wait. This isn't a great example. I'll do it on another one. I'll draw a bunch. But the bottom line for Coupang is 20 to 21 is really that zone. We're blowing through there in a big way. Look at the last three candles. Awesome action.
Wow. And you know what? Yesterday we reversed yesterday. Yeah, that's a great point. Yeah. But look at how we reversed yesterday. If you zoom in on the daily, and then today we're right back up. I mean, we haven't closed yet, but just total snapback today.
Yeah,
I mean, it's a golfing candle. Yeah.
Golfing the hole. Yeah. So look, next stop, call it 30. But this is one I plan on holding long term. I like it a lot.
Was that red? Was that a fib, or were you just drawing a shelf at that former
polarity zone?
Okay, yeah.
Touch.
So let's move on to another one that I know you like here, DraftKings. Hanging between 50 and the 61.8 fib.
I'm so annoyed at DraftKings today, Pat.
You said you put out a position, right? Recently?
No, I tried to put on a position. Still have not been filled.
Oh, that's
when I don't get filled in positions, it like ruins my day. It ruins my day. I start pulling up 1 minute charts, trying to figure out how to get in. I get none of my work done. So that's what DraftKings is doing to me today. Oh, I might have gotten filled now. I'm just looking at the candles over the past 10 minutes or so. Maybe I did get filled. Market weakness. Just since we started the show?
No way.
What happened at 1:30? Oh, it's the Powell, isn't it? Let me just check. We're coming to you live. Oh, look at this. God, it doesn't get any better. Powell, he's talking now. That's this little weakness in the market. Recent data shows recent data shows lack of further progress on inflation this year. The performance of the U.S. has been quite strong. Broader wage pressures continue to moderate gradually. 12-month core PCE inflation was little changed in March, according to estimates. Fed took a cautious approach to not overreact to declines last year. Recent data has not given greater confidence.
What do you think the chances are we go green?
If higher inflation persists, Fed can maintain current rate as long as needed. Oh, the market does not want to hear something like that. Restrictive policy needs further time to work. The 2-year yield in reaction to this hitting its highest level since last November. So what did I just read off? What does that all mean?
Ooh, the 2-year.
Powell, the Fed chair, is preparing the market for maybe no cuts this year, right? The market wants cuts. Risk assets want cuts. I think they've been really resilient without the cuts. But it certainly seems as if the Fed chair, and they always do this, is trying to really walk a tightrope and maybe prepare us for a 2024 where Fed, the policy rate doesn't change at all. No cuts, no hikes. Things are pretty peachy from an economic data perspective, right? So I don't really think you needed to come on and say this, but He did. Market sold off a little bit, reversing higher now. Let's let this all shake out. But I just thought that would be fun. Back to DraftKings.
Yeah.
Again, very long DraftKings. This is one of my favorite, stocks for the long run right now. We have a 62% retracement coming into play as we continue to work higher up the right-hand side of this base. I think you could use VWAP and jump this. So VWAP from the highs from last month. Price is running into them right here today. And what do we have in DraftKings? We have a beautiful reversal. Textbook trend reversal. And then a bunch of continuation patterns that you could play along the way, right? So you had one right here, right? That gave you a nice leg higher into another consolidation. That gave you a nice leg higher into another, downtrend channel consolidation. That gave you a nice leg higher into this, which is really another consolidation. It's not going to draw as well. Something like this. Right? I think we can continue to buy these little short-term continuation patterns. And I think DraftKings is going to continue to, climb higher up the right-hand side of this base. And we're talking about DraftKings at new all-time highs by the end of this year. So 40, if you want to jump it at the VWAP, call it 46. Confirmation at 49.50 or the pivot highs from March. Next stop, old all-time highs, 74. That's going to be about a 50% move from either of these entry levels.
Man, I like that one. It's really climbing up the right side of the base there. And like you said, just consolidation, pop, consolidation, pop.
I love the stock. The fundamental story here is so good.
Let's go on to Jonathan asked about the US dollar index. You want to go there?
Jonathan, usually I would be like, man, we're trying to have fun out here. Don't ask about it. But you're so right. This should be front and center for everyone right now.
I will say, and tell me what you think of this. I'm surprised at how resilient the market's been. If you told me dollar index was at 106, I would have thought we'd be somewhere between 5 and 10% off our highs.
You know what, Pat?
I know we're not too high off, but
awesome point. Everybody go listen to our Twitter Spaces, because on Spaces, just before, I think, you asked me a real asshole question. What's the most bullish thing right now and the most bearish thing right now? And for the most bullish thing, I said the way that the market or risk assets in general have shrugged off this rally in interest rates. And I should have also thrown the dollar into that.
Well,
right?
I mean, they're kind of the same. I don't want to say it's the same thing, but they're very similar. I mean, it seems like the dollar is trading off of rates, and rates are really driving the dollar.
Correlation has been strong all cycle, continues to be strong. You're absolutely right. Stocks look so good still. Yes. Have we given some back since last week? Absolutely. Rates and the dollar have been rising all year.
Yep.
Stocks have been great. Or if you don't want to say great, more than fine. Okay.
I mean, yeah, the year got off to a great start. Yeah.
So the dollar, not the cleanest. Let's just talk about levels here. And really, it's. I'm gonna have to zoom out to really give you the full picture. So I think we got the 38% from these Q1 highs to the 38% retracement. So 105 to 106 is a range. I think confirmation of this little reversal pattern happens at 107. Which is the pivot highs from last fall.
And that would bring us up to where?
I don't want to see Dixie above 107. I think that confirms this trend reversal.
And, right? While we had stocks have been fine, I think I have a hunch that if we did break 107 and it starts to really accelerate here, it's going to be probably harder for some of those risk assets to ignore it, right?
The market can shrug off intermarket headwinds like this easily over shorter time frames. It's much more unlikely that the market can shrug off a rising dollar and interest rates over longer time frames. What do I mean by that? This has already been going on for 4 months. Rising dollar, rising interest rates, stocks unaffected by it. That won't last forever. We won't be looking back here and saying, oh, wow, interest rates and the dollar have been rising now for 12 straight months and stocks are just fine. Highly doubt that. Right. So you can see these intermarket correlations come off and dislocate over shorter time frames. we almost never want to make the bet that stocks won't be impacted by a stronger dollar over longer time frames. Does that
Right.
make sense?
Yeah.
So really at 107 here, that's trouble territory. And when you zoom out, what a monster base it is, right? You have a big level that we're already above
Oof.
in the low 100s here, which we've been above. So we haven't been zooming out and showing this look too much lately, just because, again, we took this out back in February.
No, it's a good reminder. That's a really good point there.
So 103 first, already checked that box. Then this 105, 106 range, checking that box just over the past, week or two. 107 is really confirmation. Then we're talking about the dollar back, above 110, heading towards maybe 115.
Oh man, you really are ruining the fun here.
Yeah, Jonathan, way to kill the vibe, dude.
Man,
We're
talking about tech stocks, Coupang, all this.
Nothing can ruin my mood today. I told you why. I just found out that we got some locals cooking New Haven style pizza like a couple blocks away from me. So I'm gonna go eat some as soon as we're done with the show. So I'm gonna be okay regardless. But the dollar above 107, I don't know how okay my portfolio is gonna be into the end of the year. We might have to rethink some things there.
Listen, we got like 3 more to get to. Can we get to them?
Yeah, because I got pizza on my mind.
And also, what kind of slice you going with? You go with just the classic cheese at first? If I'm going to a new place, I like to try the cheese first, as a baseline.
Yeah. So the cheese, the margarita, whatever their traditional is, yeah, you always want to try that. But then, so in Connecticut, if you ever do New Haven style pizza, it's really the Connecticut traditional is like a clams casino. It's clams, bacon, little onion. Yeah, it's lovely.
Really?
Lovely. So I already peeped their menu and they got that going. And then they also have a Key West variation of it where they're replacing the clams with Key West pink shrimp. So I might venture out, but we're definitely going to get 2. So there will be leftover pizza for tomorrow.
Good stuff. All right,
you ever have breakfast pizza?
Like with eggs on it?
No. Breakfast pizza, I mean just a cold slice in the morning.
I probably have for sure.
Don't ever put eggs on the pizza.
I agree. Let's do SBSW. What is this? Siboney Stillwater or something?
Siboney Stillwater Gold. So again, right idea, but wrong chart. I remember when we were so excited about this one. Sean had an option trade on it. And we thought we were going to break out above the upper bounds. This is when these commodity assets peak back in Q1, Q2 of 2022. And instead of going sideways, like we talked about with energy, materials, so many, have consolidated the gains off of their 2018 or 2020 lows constructively. This one, not constructive at all. Really straight lower. I guess you call it like a falling wedge, which is a pattern that I don't really believe in. You can't touch this with a 10-foot pole. Move on. Yeah, this is bad. This is bad for your money.
Yeah, but I do remember when it looked like a nice cup and handle for a while. It was really shaping up and then just disaster.
Yeah. It's got
a good lesson in failed breakouts, right? And what can happen when you do get rejected or when a very bullish chart falls apart, you don't want to stick around to see what happens.
You don't want to stick around at all. That's true.
Let's do GCT and SE.
So this is Grand Central Terminal.
No way. Giga Cloud. Oh, okay.
GCT. That's always been Grand Central to me. All right. So, hey, fib retracements, look at this. And let's just do this exercise now, right? So we had a question about how I use Fibonacci's. Let's do this.
Perfect, yeah.
I'm measuring here. I'm trying my best. It's probably not perfect. They do have things you could use like a magnet.
Yeah, all the way to your left. There's a little magnet.
I don't like it, Pat.
Okay.
Really? I don't know how to use it.
You can even select a strong magnet or a weak magnet, but yeah.
Oh God! So I guess that's probably really helpful. I'm just not used to it. I will play with it in the future. But the point here is it's not perfect. I don't care if my fib start and end is to the penny. In fact, I'm going to look at something like this, and again, maybe it's not the best example, but I'm going to zoom in and say, well, who really transacted up here, right? At the top tick, intraday, on Tuesday, August 23rd, 2022. Did anybody really transact up there? Is that really where I want to draw it? Maybe if I had a couple closes here or a retest back here, I might bring this line down, right, and put it somewhere else. What I will do sometimes, and I won't publish charts that look like this, which is why this is such a good exercise, it's such a good question. I'll publish charts that are only very clean, and I'll clean up my messy annotations before I publish them. But the closing high was all the way down here, Pat. So you could also draw it like this, right? And then I could say, well, this was kind of a blow off low down here in November of 2022. And then I got a little shelf of lows where I see buyers coming in several times in early 2023. So I want to set my fib ending point there. And then what I have is a range of fib levels, right? Where
Here, why don't you make one color and then one the other?
yeah,
Just to kind of separate them. You can use one color all the way at the bottom.
perfect.
There you go.
Good call. Okay.
I'll stop backseat driving. Sorry.
Oh, that's good. That's good. So I have them drawn from the intraday high and low here in red. And then I have them drawn from the closing high and then just a low that made more sense to me because I got multiple touches down here, 483, right? And then what I have is basically like, I don't know, ribbons or zones. So the first target would be somewhere between 74 and 98. This is obviously too big of a range. Usually you don't have that much variation between the intraday high and the closing high. It would probably look something more like this, right?
Yeah.
It will give you a little range like that. And then that's my level of interest, right? If I get up to 84 and momentum starts waning, I'm not going to hold to 98 just because the closing level fib gets me there. These are ranges, they're ideas where supply might enter the market or demand might enter the market, depending on if you're doing this in the opposite direction. At the end of the day, it's not a perfect science. It is an art. And you can draw your fibs the way that works for you or speaks to you, right? And that's not wrong either. These are tools. They're designed to help us. There aren't hard and fast rules. We talk about drawing our polarity levels or our levels of interest with markers or crayons and not pens or pencils, right? Because they are zones, they are ranges. And you never want to say, oh, resistance is here to the penny. No, resistance is in the 95 to low 100 range, right? That's how we talk as technicians. You have somebody-
a lot of the times when you get that fib that you're comfortable with, I'll still kind of treat it as like it's a general area, right? Like
yes,
you got to give it some vibration, let it dance, as JC would say.
If we blow right through my 161.8% fib, I'm not selling as soon as we touch it. I'm putting a trailing stop on, and maybe it runs another 10 points, right?
Exactly. Yeah. Yeah. That's the best way to do those. Yeah.
If you have a chart person or a technician come to you and say, oh, resistance is at $96.78, they're probably new, right? Because it just doesn't work that way. These are zones of interest.
It's almost arrogant to think that way, that your analysis is so perfect that the market is going to stop on a dime where you thought it would.
That's absolutely.
I saw that within the video a lot. You know, I think, what was my target? I think it was at 700, and then it overshot it. And once it was over 750, it had to get bullish again.
Right. And
so
listen, we have to understand as market participants, there are machines that are built to make sure that nothing ever works to the penny. Right. And if there is a clear level, they're going to shake you. They're going to shake above it, shake below it, and make sure that you're out and you quit on that level before the move happens. Right.
Then every once in a while, you'll see it work to the penny, and that's what'll really screw you up, because then you'll think, oh, that's going to happen again.
I try not to look at those. I erase them from. But yeah, everything happens. Things happen every day that have never happened before in markets. That's what keeps it fun and exciting for us. But here's the way that you should think about fibs. Draw them at the intraday, draw them at the closing, draw them at a key level, like, picking these lows down here. That's what we did, right? That level just made sense around 480, almost 5, right? And then you have these zones. And that's how you kind of want to operate. I really like the way that this is built up.
Yeah, no, that turned out to be a great example. Why don't we do one more? I'll throw out three names and then you just pick whichever one you want here. Mark asked about XHB, the home building ETF. We got AG, silver, and then SE, C limited.
Okay. So yeah, I always feel like I should at least address the ones that I'm in and talk about. So
Sure.
AG and SE. Listen, home builders are like a lot of things right now. So let me just spread this out.
Home builders did what they were supposed to. They hit their target.
Right, Pat. And I don't know what target you're talking about, but look at this.
That's the one.
You zoom out forever on XHB, and talk about fib levels and where to draw fibs, right? Let's do the same thing here. Now let's
Perfect.
do closing instead of the intraday, and then the
I'll
closing here.
When I do this, I'll usually drop it in the line chart so that I can see where the closes are a little easier.
Oh yeah, great point. Great point. Yep. So what Pat's saying is, and I mean this is monthly, so I would
Oh,
go
okay.
daily, but or at least weekly. But anyway, gets the point across, right? So ran right into that fib. You can even say maybe, put in some sort of failed breakout, whatever. And now it's failing. So I think home builders, this is a buy on strength setup now. How, how long can this correction kind of run for, and what kind of damage can we see from it? Well, you got some pretty clear pivot highs from November 21, almost August of 23, coming in the upper 80s here. It's another more than 10% of downside from current levels. So I think you want to kind of step away, be really patient, be really hands off, sit on your hands, and see where this corrective action takes us. Again, wait for some strength. Don't just buy blindly when these momentum divergences are confirming. Failed breakouts are everywhere. We're failing at key resistance. You don't just want to kind of step in on a red candle or a down week, right? Wait for some sort of strength to enter on. And I think in the case of home builders, you really want to enter on strength back above this Fibonacci or back above these highs from just earlier this month. And
Yeah.
then, okay, yeah, you got anything to add to that?
No, I think I mean, let it correct, right? I mean, like it said, it did its thing, and there are much worse areas. Even though this is a strong area, let it correct. And to your point, it could take weeks, months. Um, but until it retests support or breaks out and reclaims that level, not much to do.
and this is kind of what we're seeing. Just I know I keep mentioning these momentum divergences, but this is it, right? Momentum just really been waning.
And it's headed towards oversold, right?
You're getting this, monster move higher, and you're barely getting overbought. Nowhere's near the overbought momentum reading around 87 that we saw in December. It doesn't bode well. There has to be some give back eventually. We're getting it. You got a shelf of old highs here. That's a logical level. You got the shelf here. That's a logical level, right? So let's just kind of wait and see. Let's see how this thing kind of settles out. And then AG, just real quick. I'm not in it. Haven't been in it. My move happened pretty quickly. I was trading very short dated calls. Great trade. Wish I owned more, but nothing to do for me right now, and mainly because of this. That's AG breaking out of the channel. But here's silver. As long as silver is trapped below
Yeah.
this very, very clear polarity zone, I don't really want it, right? I was trading a little catch-up move to gold. Silver was not nearly this extended when I, was buying the AG calls. And frankly, I didn't have much exposure to precious metals at all. I just had a little, short-dated calls in AG. That's pretty much the only exposure that I had to precious metals. Um, just kind of wanted a little bit of skin in the game. But until silver gets back above, this is SLV 27, I'm not going to be too interested in AG. And
Yeah.
then SE, listen, I think the action from Coupang is pretty constructive for SE.
Similar companies or
Both online retail, both Southeast Asia. Is South Korea Southeast Asia? Yeah.
yeah, I think.
Um, so here, big move today, 8%. Great. What would I do here? Drop a fib.
What a nice engulfing candle too today. I mean, we we gapped lower, and then here
Is
we
there
are.
news driving this? Does anybody in the chat know if there's maybe some news driving this?
Let's see.
Listen, it's a mover. This stock can really be a runner, which is why I like it so much. Um, it'll have plenty of juice. So this might just be a technical move, but you got a little, continuation pattern here coming off of, I think this is a pretty sweet base, right? Although shorter in duration than most of the bases that we've been buying, a base nonetheless, right? You got to start somewhere. Monster overbought momentum reading back in March, almost 90, right? Now we're reclaiming VWAP from those corresponding highs. Let's go. I think you can enter this one right here today. Call it 56. Maybe I'll add exposure. I'm already long calls in common. But for me, it's 56. Now 90. Then that's when you really want to pile in for a longer term trade. 90, the trend reversal's in. And I think we're talking about C limited for years and years to come as it continues to climb up the right-hand side of this base. The gains can be massive. So maybe, to build a starter position. I love scaling into trades. So 56 is the level, 90 is another level. Depends on your time frame, depends on how you wanted to trade it. If we had weakness here, I would be saying, hey, 46 is a level, right? These pivot highs and this little base. So a number of ways to play this. It really comes down to who you are as a trader, your risk preferences, and your time frame. So
yeah, I mean, definitely looks like kind of a Wyckoff accumulation bottom forming. Of course, that could take another year. We could be talking about 2025 before it finally gets out of there. But
absolutely.
yeah,
So this is Philippines, Malaysia, all those countries, online retail. People out there using C Limited on a daily, weekly basis. This is their Amazon.
okay. Very cool. Well, Steve, I think we gotta leave it there. We got to a lot of stuff. The mailbag was awfully light this week, which on one hand, that's really nice because we got to spend a little bit more time with the news in the chat.
But it makes us feel good because we finally got to all of your guys' requests, which
I know. When was the last time we could say that?
We never do that. So,
right.
All right, great.
All right. You want to lead us?
All right, so we'll take us out. Pat will be on the charts on Thursday, as always. So join us again, 1 o'clock Eastern time Thursday for the next segment of Chart Request Live right here on Stock Market TV. In the meantime, join us on the morning show every morning, 8:30 to 10 o'clock right here also on Stock Market TV. All right, thanks, Pat.
Awesome. Thank you, guys.
Bye, everybody.